When you're thinking of buying an exchange-traded fund, the choice can be daunting. And I'll now run through how to look for ETFs and narrow down the selection. So the first step is to choose which index you want to follow. That might be an index of big companies in a certain part of the world, or dividend-paying ones on the UK market, or even a basket of government and corporate bonds. So once you've picked a certain area of the market, the next step is to filter down the selection. So for example, if you type in FTSE 100 ETF into an investment platform, you're likely to get many different products. They're all doing exactly the same thing. They will track the performance of the FTSE 100, which is an index of the 100 biggest companies on the London Stock Exchange. So how do you know which one to choose? Well, if you search for FTSE 100 ETF on a mainstream investment platform, you'll see offerings from the biggest providers such as Vanguard and iShares, as well as products from groups with which you may be less familiar, like Amundi and Lixor. But if you change your search term to something like UK ETF and look for funds that track newer indices, you could find lower cost product options. That's because trademarks such as FTSE, S&P and MSCI push up the costs of ETFs, which use them in their product names. So one of the biggest costs for ETFs is the indices themselves. But do you really need a trademark like the FTSE 100 or MSCI to pick the 100 largest companies in the UK? There's ETFs that provide the same by using lesser known indices, and as a result they're much cheaper. Now, for example, Lixor Core Morningstar UK UCITS ETF costs just 0.04%. That's almost half the FTSE 100 tracking ETFs, but offering exposure to the same companies. There's also ETFs which track core indices from less well-known German index provider Solactive, such as L&G UK Equity UCITS ETF. And it's a similar story if you're interested in the US stock market, which is often represented by the S&P 500 index. So for exposure to the companies in the S&P 500 without paying for the core S&P brand name, Lixor Core Morningstar US Equity ETF costs 0.04% versus 0.07% for iShares Core S&P 500 ETF. Now these small savings can add up to tens of thousands of pounds when you compound the effects. While it may seem an easy decision to go just for the cheapest one that gives you exposure to companies or assets that you want, don't forget about the trading costs. So don't simply look at the headline costs. There's other costs involved in buying and selling ETFs as well. Now ETFs work like shares. They have a bid-offer price, and the spread between these buying and selling prices can be quite different. Now, for example, the bid-ask spread on iShares FTSE 100 ETF is 0.04%. Now that doesn't sound much, but it's actually half a year's worth of fees, as the ongoing fees are about 0.07%. Now, some providers could have a bid-ask spread worth 3 or 4 years worth of fees, so you could end up paying 30 basis points or 40 basis points just to get in and out of that ETF. So finally, you should also think about fund size and why it matters to the overall cost of the ETF. Now, some experts say you should focus on ETFs that have got more than £100 million in size. And there's some funds that are actually tiny, and the cost of directors, custodians and so on can actually weigh on performance and add to the cost. So I hope you found this video on ETFs useful. Thanks very much for watching.